Ever wondered how companies become household names traded on the stock market like Amazon or Apple? It all starts with an IPO, or initial public offering. Think of it as a company's grand debut on the stock exchange, where they offer shares of their business to the public for the first time. Before an IPO, a company is considered private. This means ownership is limited to a small group of people like founders, early investors, and employees. Going public opens up ownership to anyone and everyone, you, me, even your grandma. This transition from private to public is a major milestone, marking a company's growth and ambition. It's like graduating from the kiddie pool to the Olympic swimming pool. But why do companies take this plunge? Let's dive deeper into the why behind the IPO. So why would a company choose to share its success and profits with the public? Well, going public comes with a whole buffet of benefits. The main course is undoubtedly capital cold hard cash. IPOs can raise massive amounts of money for companies, fueling their expansion plans, research and development, or even paying off debts. Think of it like this: a bigger factory, a fancier lab, or maybe even just a cleaner balance sheet. But it's not just about the money, folks. IPOs also boost a company's public profile. Being listed on a stock exchange like the New York Stock Exchange or NASDAQ is like earning a badge of honor. This increased visibility can attract more customers, partners, and even talented employees. It's like shouting your success from the rooftops. Going public isn't as simple as throwing a coming out party, though. It's a meticulously planned process involving multiple players and a whole lot of paperwork. First, the company needs to get its house in order. They'll prepare financial statements, hire auditors, and basically make sure everything is squeaky clean for potential investors. Think of it as getting all dressed up for a first date. Next, they'll team up with investment banks. These financial wizards help determine the IPO price, market the offering to investors, and ultimately facilitate the sale of shares. They're like the matchmakers of the IPO world. Once the price is set, the company's shares are finally listed on a stock exchange and the public can start buying and selling. That's when the real excitement begins. Now, before you jump headfirst into the IPO pool, remember every investment comes with its own set of floaties and potential belly flops. Let's break down the pros and cons. For investors, IPOs offer the exciting opportunity to get in on the ground floor of a potentially high-growth company. It's like finding a winning lottery ticket before anyone else knows the numbers. On the flip side, IPOs can be risky. Since the company is newly public, there's limited historical data to predict future performance. It's like betting on a rookie athlete. They could be the next Michael Jordan or they could fizzle out. Always do your homework. Research the company, understand their business model, and consider your own risk tolerance before taking the plunge. Over the years, we've seen some legendary IPOs that have made history and in some cases minted millionaires. Remember Google's IPO in 2004? Investors were initially skeptical, but the stock soared, proving that even search engines can be gold mines. Then there was Facebook in 2012, the most anticipated IPO of its time. These IPOs weren't just about the money, they changed the way we live, work, and connect with each other. That's the power of a truly successful IPO. Feeling ready to dip your toes into the IPO waters? Here's a quick rundown of how to get started. First, you'll need a brokerage account. This is your gateway to the stock market. Once you're all set up, research upcoming IPOs. Many online resources provide calendars and analysis of upcoming offerings. Keep in mind that not all brokerages offer access to IPOs, and those that do may have eligibility requirements. It's like trying to get into an exclusive club. Sometimes you need a connection. If you're lucky enough to snag some IPO shares, remember to track your investment closely. The initial excitement will fade and you'll need to make informed decisions about buying, selling, or holding based on the company's performance. IPOs are more than just financial transactions. They're the lifeblood of the stock market, injecting it with fresh capital and innovative companies. They provide opportunities for investors to share in the success of growing businesses and allow companies to achieve their full potential. Understanding IPOs can seem daunting, but hopefully this crash course has given you the confidence to navigate this exciting world.